week trader talk in today's market. I am your host, Kevin Horner. I want to thank you all for joining us this fine Monday. Today, I'm pleased to be joined by my friend and Schwab Regional Investment Strategist, Rachel Deshelle. Good morning, Rachel. Happy Monday to you. How are you today?
Good morning, Kevin, and good morning, everyone. I'm doing well. How are you doing this morning?
Well, I'm fantastic. I got to witness a Bronco victory yesterday, so I couldn't be much happier. I see we have at least one Falcon fan in the mix here today amongst our many attendees. I'll apologize for the way that went. I've been on the other side of that game many, many times. But we, of course, are not here to talk football as much as I would love to do just that. We are here to talk the market today. Plenty to get to, Rachel. Some interesting developments last week. We finally got a little bit of a breather in the market. We'll see if that has legs. Say hi to our friend Cameron May in the chat today. He's going to keep an eye on things for us. We'll, of course, do the same and try to get to some of your questions and comments there as well, everybody. So feel free to post in there for the duration of our show. Follow Cameron and me on X. Cam is at Cameron May CS, and I am at Kevin Horner CS. And eventually, we're going to have Rachel out there posting as well at some point, I would imagine, if you're not already, right? Not yet? Fingers crossed. Okay.
Fingers crossed.
All right. Let's get to our disclosures, and then we're going to start looking at a bunch of charts, everybody. So, as always, remember that our discussion here is exclusively for your information and your education. We do not make recommendations nor endorsements for any particular approach or trading in the marketplace here. We do cover technical analysis or discuss technical analysis quite a bit in this segment. Please continue to think of it as a complementary view to your fundamental research. We encourage you to make decisions based on a multitude of factors rather than just any one single approach. All right. Also, we're talking about an agenda here, everybody. We get started with that top-down approach. So we always start broadly. We look at our major indices. We're going to hit up the S&P 500. We're going to look at the NASDAQ 100 and, of course, the Russell 2000 before we start looking at sectors and industries that are moving around today as well. We've learned a little bit about expectations that the market might have for the coming administration shift in our government. So there's been some developments in some of these sectors that are kind of notable. We'll see to what extent those have legs. And of course, we're going to get to some stocks in the news as well. So we'll start off, as we always do, with that look at the S&P 500. Rachel, we did pull back, but talk to me about the level to which we pulled back, Rachel. It seems like a pretty important one thus far.
Yeah, definitely. So it's always interesting to find those horizontal support and resistance levels and find where the market tends to pull back to. And it looks like it was those former highs. So that old resistance becomes new support right above that gap level that you drew there. And then also right above that 20-day simple moving average too. So we'll have to see if today there's going to be some bulls that may step in and create some buying pressure here.
Sure would be nice, right? I think there was a little bit of angst on Friday simply because we've pulled back. We're looking at about 150-point pullback off of the peak at 6,017 to where we are trading right now at 58.68. So, you know, Rachel, it's easy to get bogged down in a quick 2-day, 3-day move that feels larger than we've dealt with. But it can often be helpful to be reminded that, quite simply, our down days tend to be speedy in nature. They may not be as frequent in nature, but they are commonly bigger moves than our grinding moves to the upside. And I think it plays on our emotions a little bit. Did you talk with people last week that may have given the indication that that pullback was a little uncomfortable simply because we've been grinding higher so consistently?
Of course. And I think you hit the nail on the head with it, with emotions getting involved, because I think the fear emotion is typically something we see as a stronger emotion than the greed emotion. So, and the market tends to fall kind of twice as fast as it tends to go up. So that's something that we've seen as well. But the conversation that I've been continuously having with clients is taking your emotions out of the decision-making process when it comes to your trades or your overall portfolio and sticking to whatever plan or strategy that you have in place. So if we need to tighten up our stops, reduce positions, move a little bit to cash, whatever that plan is for you to keep those emotions out of your process, to continue doing throughout this pullback here.
Yeah, you know how I feel about that comment. I love it. Just the idea of referring back to your own plan, putting yourself at a point of comfort, not going too far down the path of, oh, I know that this is now happening, because rarely do we know anything. We try to simply position against probabilities. That's the process of a trader, really. And I know it was difficult simply because we were moving lower on the heels of some of that Fed commentary last week, when Jerome Powell suggested that the Fed and the central bank was, quote, not in a hurry, end quote, to cut rates, given the strength of the labor market and the strong growth of the U.S. economy. So that kind of put a little bit of profit taking in the lead, it felt like, especially on Friday. But the level to which we have fallen really becomes opportunistic for those traders who maybe didn't take that initial trade here on the breakout we got post-election. So commonly, Rachel, we get these throwbacks after a breakout, and if confirmed as support, and it's too early to tell that we're confirmed as support, I'll just make that point, everybody. We probably need at least today, if not another day or two at this ledge. But the reminder is that a throwback and confirm of support at the former breakout, former resistance becoming potential support, that's an area where a lot of traders are going to be more comfortable deploying money after a retest, Rachel. Do you find that, I mean, obviously the market's never going to give us certainties. We know that, but it seems like that's a more comfortable entrance for a lot of traders.
Agreed. I think waiting for that confirmation is going to be first and foremost. And I know for a lot of traders or investors, that confirmation that you mentioned may look a little bit different. So for the longer term investor, waiting for confirmation may mean looking at the weekly price action if you're a little bit more long term. And for our day traders or swing traders, it's looking at the close of business, seeing what the closing price or the closing print does after today, and then maybe even waiting 2 or 3 closing prints as well for that added confirmation or that added filter. So I know that's what a lot of traders, successful traders that I see and speak to tend to do, is wait for that confirmation, have those hard and fast rules on it.
That's a great approach, right? Doesn't matter what we necessarily think the market's going to be doing immediately, but commonly what is important is keeping our own portfolios in a complete and total point of comfort so that we can weather things that move against us, right? My encouragement would be try not to make those moves at points of support, because support does give you the opportunity for things to be bouncing here. Having held it today, granted, again, very early in the morning, we'll see if that low we made on Friday maintains. I'm sure there's going to be some traders suggesting that trades through the low on Friday are going to look a little bit negative and could certainly push us down to the 50-day and potentially lower. So maybe that's the ledge to watch, at least on an intraday basis, everybody. The low we made there on Friday at around 58.50 becoming a short-term spot. So we'll monitor that for us here on the SPX. What about the NASDAQ today? We had a deeper pullback there, everybody. You can see we did not hold the 20-day, Rachel, but to this point, that manually drawn trend line that I have in here, many would suggest it's nothing else. That is still a higher low.
Yes. So I guess one of the most common sayings about following the trend is the trend is your friend until the end when it bends. And it still looks like we're so far making higher highs and higher lows, like what you pointed out with the trend line there. We are just under that horizontal, like old support, new resistance now. So we're just seeing with the price action today, which seems to be forming some type of inside bar action, where the trading activity just in the first 11 minutes is within the trading activity of Friday. So if we're going to continue to see this volatility compression like we're seeing just at the open, this may give us another chance for a support bounce off this trend line here.
Yeah, you're right. I think that's what we're monitoring, at least, right? If you're new to this trend, you might still have to pay attention to the purple 50-day moving average below as a potential test zone. We'd love to get a bounce in here, but that candle was so big on Friday that it's highly unlikely we get any directional heads up today, right? We'd have to trade through Friday's low to be bearish further, or trade through Friday's high to be opportunistic and bullish further. So I think it's probable we're going to get it, likely to get an inside day today, but hopefully that means that it's a price discovery move today on the heels of a big sell on Friday. So there was a question in the chat here about deploying money to some of them. The question was specific about the S&P 500, but really the idea about buying fractionals or a set amount of individual indices. I'll just mention, everybody, if you're looking for exposure that is not through equities or exchange traded funds, many traders fall into the realm on those longer term investments of utilizing mutual funds. And the way you invest with mutual funds is with dollars, not with shares. So you tell the platform, for example, you go into schwab.com in this case, as opposed to the Thinkorswim desktop application, and you would place your order based on the amount of money you would like to invest in a given fund. So you would set an amount, and then you would end up with the equivalent share amount that would be based on the day's closing price of that fund. So you're going to end up very likely with fractional positions, an odd number of shares. But that's how you invest with mutual funds, as an example. A little bit different than standard equities or an exchange traded fund basis. But wanted to make sure I made note of that for Rams and those of you also potentially interested doing something a little different than what we necessarily talk about here. But there certainly are opportunities for you. And further, just recognize you always have access to somebody to speak with about that stuff on our customer service line, where we have 24/7 service for you, everybody. You can always reach out to someone and have a discussion with a broker at 800-435-9050 every day of the week. Okay, so Rachel, wait and see mode on the S&P, wait and see mode on the NASDAQ here as we determine whether or not we're going to hold that short-term uptrend line. Let's talk about the Russell. On the heels of the conversation around Jay Powell last week, boy, the Russell has gotten its throwback as well. We had that extreme optimistic viewpoint, breaking out, getting to a zone of potential resistance. The prior all-time highs are not high above that 2441 high we see here. But boy, did we get smacked down last week, didn't we?
We definitely did. We got smacked down to quite a important level here, which is that previous gap level where we almost had like a breakaway gap. So the start of that new trend, breaking above that resistance where we gapped above it previously, just less than 2 weeks ago. And now we've had a little bit of a throwback to that level. And Kevin, to your point, if we zoom out for our more longer term investors and we look at those prior cycle highs, the market definitely found an interesting level of resistance there, and an interesting throwback level that we've seen a few times.
I mean, yeah, you're absolutely right. That's one of the things that's great about technical analysis. When the numbers play out favorably, everything lines up. We know that doesn't work all the time, and often it works until it doesn't. And then when it doesn't, we have to be nimble and shift right away and understand that things are suddenly different. But right now, boy, this has the presentation of a short-term uptrend with strength, with momentum. The question becomes, can we pop through that 2460 essentially up above those prior all-time highs, which would give us, a breakout? And we've said it many times, Rachel, in this show particularly, new highs are generally not considered to be bearish.
Exactly. And I mean, if you even look at the moving averages too on this longer term chart, I mean, when we look at the slope of the moving averages, that tells us a ton about the force of that trend. And all the moving averages, you have the 40 week, the 100 week, and the 20 week. We're all well above each of those. And those are all in an upward sloping trend too.
Yeah, you're absolutely right. So we're getting, even still, after that proper pullback last week, we are getting still a momentum move in small caps here. Now, the question again becomes, is it legitimate? And the pullback level is very important for a lot of traders. But given the fact that we've held the gap, holding the 20-day, if nothing else, new money, new traders who are optimistic about the future in small caps have an opportunity to position themselves here. And obviously it all comes down to time frame. We say that all the time as well, don't we, Rachel? The time frame matters. But a short-term trader might like to work with this gap zone as potential support. Maybe they place a stop below the 20-day moving average by some measure, something like an average true range if you're looking at an equivalent of the Russell. But you've also got those higher lows that have been coming in with the 50-day, and then you've got the uptrend line. So there's a number of areas where a trader could deploy new money and only choose to move on if we see additional weakness. But again, that all comes back to the time frame for those traders and investors. If they're a long-term individual who's simply looking at it and saying, look, I think there's more upside for the small caps in the next 4 to 6 years than I did last week or 2 weeks back, well, then whether or not this holds the 20-day probably isn't all that important for them. But very different approach for the individual who might be watching the market every single day and wants to work with those shorter term moving averages. So pretty interesting move here we've seen in the Russell. Rachel, one group we haven't looked at a whole lot, at least I think we skipped it when I was in here on Friday on Trader Talk with JB, but we didn't look at the semis, and the semis have kind of broken down here. We got to take a peek at what's happening here. Look at that. We fell out of the triangle, and we've been talking about directional heads up relative to the pattern. I think we may have gotten it on Friday.
Yeah, that chart is not like the others. That looks a little different. And we see those shorter term moving averages crossing there. We see that breakdown and that gap through that triangle trend line support. So, I mean, we're through the 20-day, the 50-day, and the 200-day moving average. So to me, this could look like a little bit more of like a change of trend there, especially since we've been making lower highs in that case as well. And we've failed to make that higher break through that trend line resistance too. So what levels stand out to you, Kevin, when we look at this chart, maybe even zooming out a little bit as well? Is there another support level that really sticks out to you?
Well, I can't get away from the support level that we've already tested twice now, right? And that's pretty good call out down there at around 4,300, 4,275 up to 4,300. That is a significant ledge, and it's also significantly far from where we are today. So we got to call that out. Obviously, we would not like to get there, but the break of the uptrend line at least gives us a little bit of a heads up. I mean, we've been saying that the break of the uptrend line or break of the downtrend line was going to dictate short-term directionally, and I think we are there. I mean, right now we are testing the low from Friday, and if we take out the low from Friday, we could see additional weakness in the space here today. If we take a look at it on the 5-minute bars once more, let's see, we've got it's supposed to be a 5-minute bar, everybody. Let's pair this back. There we go. So we actually opened right below the the pivot point and haven't gotten through it. That is not a great intraday or short-term look here, Rachel. So I'm feeling a little uncomfortable as it relates to the SOX, given this the rejection inside the triangle, and the potential surely exists for the semis to take it on the chin a little further here. In fact, one of the headlines that we had to make note of today is tied to NVIDIA. In fact, let's talk about this real briefly since we're talking semis. The corporate news as it relates to NVIDIA grappling with new problems related to its much anticipated Blackwell graphics processing units for AI, notably how to prevent them from overheating when they're connected together in the customized server racks that they have designed, according to a report out of The Information. In recent months, NVIDIA has asked their suppliers to change the design of the racks several times as it has tried to overcome these overheating problems, according to NVIDIA employees who've been working on this issue. And evidently, this has been an issue for both customers and suppliers with knowledge of the same troubles. So it could be having an impact on the broader space. And if we take a look at what NVIDIA is doing today, well, we're not having a positive reaction here either. NVIDIA breaking the 20-day from and through the low that we made on Friday, Rachel. So maybe a little bit more of a momentum-based move here as well.
Yeah, I definitely agree with you there. And I know that NVIDIA is definitely the leader by market cap in the overall market as well. So now it's taking up more than 7% of the S&P 500 as our market cap leader. It has that highest weighting. It has technology even has a very large weighting in the NASDAQ as well, with taking up over 50% of the NASDAQ. So um, taken that, a lot of these semiconductors or other major tech stocks, which is where a lot of our indexes have a lot of the concentration, if they're dependent on NVIDIA, and there's almost like a sell the news type of reaction here, that could be why we're seeing that drag down or that pullback of the entire market overall. But I wanted to also just kind of call out something that one of our viewers mentioned about rotation, because I know when we look into the sectors in a few minutes as well, we see maybe some money rolling out of technology and maybe rotating into some of the other sectors based on some of the news that we've seen over the past week.
Well, we've definitely seen some of those sectors not participating or participating in a negative sense. You're absolutely right. In fact, we're going to look at a couple of those here just right away. Let's look at healthcare. What do you say? I mean, healthcare has been really getting beaten up on the expectations of how the new administration may act as we go forward here. And you can see the thing has actually been playing out a little bit over the last few months, but it was really the last week where things got quite squirrely in this particular pattern. We've been struggling against the 20-day moving average for dating back into early September in reality, everybody. So there may have been reasons to be lightening up on healthcare space, but it was last week's action that looked so aggressively negative now, having failed at the 20-day about 7 sessions ago, 6, 7, 8 sessions ago, and then rolling over to make new short-term lows here.
Yeah, this is one where I'd be looking for another longer term area of support as well. And so, even Kevin, if we zoom out just a little bit, we can see what type of zone that we may be dealing with healthcare here. And it looks like we've had obviously a change of trend and more of a pullback to that 2021 high, 2022 high level, which I know we've called out a few times, that a support or resistance level isn't just a even level there. It's more of a zone, so to speak. So looking at so many different areas or times that over the last couple of years that healthcare has touched that level or touched that zone, could tell us that there may be a little bit more activity around this level.
Yeah, I think this is in the midst of some discovery, right? I mean, some trying to determine, hey, where are we where we can actually get a foothold? It does not seem as though we are there just yet. If we look back, you know, there could be some support in here at the ledge we're at, but it would be imminently required to really get into it. Now, the last real low we made is back here at around 1600 or so. So keep an eye on 1600 on the horizontal support line. The only other note I want to make is how, you know, I had these trend line levels built in here, right? And when we broke that trend line, we not only broke it, but we came back to test it and failed at it. It's just another reason that traders apply the lines, right? We look at the trend, we build the lines in. What we need to do as best as possible is start to evaluate those lines when they become broken. If we're in an uptrend, when they break, do we get any opportunity to get back above it? Does it then present as potential resistance? I mean, if you just look at all of the resistance right here, Rachel, it sure feels like if we wanted to be a seller, boy, did we have our chances in the last 2 weeks here to be a seller in healthcare. My hope is that we're by discussing this and bringing these things to light, that we are giving ourselves examples in the real world that we can take forward with us for these next scenarios that could play out as well.
Exactly. And the market shows the importance of those levels. And when we fail at those levels and fail to have that confirmation, that's when you can decide to make those decisions within your portfolio, within your trades, and your risk management.
That is correct. Okay, so we're getting a little continuation in the healthcare selling. We've got technology selling down about 0.5%. However, I think it's notable that we are sitting right on that 50-day moving average. So some traders are probably taking a little bit of comfort from that today. But we are seeing that our staples getting a little bit of a bounce. And then we're getting a continuation move in discretionary. Real quick, let's look at staples. We can see that we're still in this falling wedge. Rachel, as it relates to technical analysis at least, this falling wedge, assuming we find support, is actually not a bearish trend, is it? After a nice big uptrend, commonly these pullbacks can appear to be very bearish in the short run, but they may very well be just simply consolidations in the midst of a broader uptrend.
Of course, yeah. And I know patterns aren't necessarily guarantees. Although we want to look for a breakout of either direction. But to your point, Kevin, it's healthy to have a little bit of a pullback or a little bit of a pause or consolidation after we've had such a strong run. And we've had such a strong run in consumer staples. I mean, if you just look at that trend that we're looking at over the past year, it's been nothing but higher lows, higher highs. We haven't really had this pause or much of a consolidation other than for a couple months in the summer there where we traded sideways. So this level that's around, where is that, around 850 could be an interesting level to find that horizontal support where we had that previous gap up around August time.
Yeah, I agree. That was a significant ledge, prior high, prior resistance, potential support. I also, just because we got done talking about it with the healthcare just a second ago, what if I drew a trend line that tried to capture all of these tests and then our recent failure? If this were to play out similarly to healthcare, well, are we possibly looking at another rejection in here? I mean, are we potentially at that crux spot where we'd almost say, hey, we got to be back above the 50-day to have any belief in this thing getting a bounce, and any bounces into 870 that are incapable of breaking through and getting rejected instead, that could be a significant development in terms of potential resistance here for short term.
Agreed. Yeah. And I definitely like that level that you called out there in the short term. But we need to get above that 20-day simple moving average first, it looks like, as well.
Yep. Let me just pull back to a longer run. Here's your weekly. So so we just got done talking about that important level. That was a prior all-time high. Let me clean the setup here real quick. And just again, Rachel, pairing back to a longer term time frame can give a visual difference, right? And suddenly this just now has the makings of what appears to be just a bull flag setup and testing major support. The hope would be that it holds here. No guarantee, as we know, but boy, that's a different reflection. And I would venture to guess, if I did my Fibonacci move and just said, hey, let's just take out the absolute low, which goes back to September of last year, and to the peak, we're going to be holding the, wow, look at the test 2 weeks ago, right to the 23% retracement spot. So a very important area, whether you're looking at it from a daily look or a weekly look. This is a really informative, longer range visual, isn't it?
This is why I love technical analysis, because sometimes math just works out. Sometimes it doesn't, but sometimes it does. So I love that drawing that you had there. And it looks like, I mean, looking at the longer term, last week we did have a close below that shorter term simple moving average. So we'll have to see just from the longer term where this week ends up. And so if you're one of those long-term investors and you had exposure to consumer staples and you're looking for that confirmation or that break of trend, and you want a little bit more of a filter or a confirmation breakout, maybe waiting 2 weeks for that close below that shorter term moving average. But we'll have to see where this week ends up.
I love it when you start talking about confirmation. I'm a big believer in confirmation. We all have to determine what it is that we think is confirmation. We talk all the time about those that so-called Horner rule. Do you look for 3 consecutive closes above a level, 3 consecutive closes below a level? Take into account that if you're looking at it on a weekly basis, everybody, and you're taking the Horner rule, you're not doing it on 3 days, but rather 3 weeks of price action. And the reminder needs to be, if you're looking at things on a longer term window, guess what? What's happening day to day may not be as important as what's happening week to week and month to month. You don't necessarily need to be the trader who is acting daily when your viewpoint is much longer, right? You can always afford to maybe pare back a little bit in your time frame, the visual that you're giving yourself. So think about taking it from that larger view, that 30,000-foot airplane view, if you can. Okay, the other space, as we talked, that we wanted to hit up was discretionary, which is up 1.25% today, 1.4 almost. And this looks like it's given something similar, Rachel, where we came back, we kind of fell briefly out of that flag type scenario here. Could still be considered to be flagging as we speak, because we've held the breakout level here as well. That orange line at 1,700, you'll see a little more clearly on the weekly, but that's kind of presents the same way today, Rachel, doesn't it?
Yeah, I mean, this seems to be a theme that we're seeing here, Kevin, where we've had a little bit of a throwback to the prior cycle highs. And I mean, we're seeing this across half our sectors, it looks like. But this week on the shorter term, it looks like just the price action today going down to the daily bars again. We filled that gap, that down gap level. So it seems like there's a little bit of buying coming in here at support, wanting to fill those gaps and push it back towards those all-time highs, but we'll just have to kind of see how today shakes out.
Yes, we will, but many would say that that initial move today, getting through the high of Friday, is at least an aggressive trader's maybe first re-entrance to the trend. And I say aggressive because not everyone's going to believe in that, Rachel. The first 30 minutes of trading on a Monday morning, they may not be as confident in that bounce at this point. But there are many traders who would be confident and just roll with it right away. Sometimes they're going to piece in a little bit, right? You know, they may not go full trade into something like that. It might be something that they get a little toe dip action, so to speak, right? Just to get started. But we'll see how that goes. Now, I know that one of the stocks, obviously in discretionary, that's moving today is Tesla. Thought we could pull up a chart here. Barclays analyst Dan Levy raised the target on Tesla significantly, up from 235 up to 270. Now, unfortunately, when you look at Tesla, that's a little different than the current price action today, Rachel. But this one appears to be breaking that bull flag itself, doesn't it?
Yeah, that looks like a clean gap through pattern resistance there, that trend line resistance. And it's coming with a strong overbought move as well, it looks like. So even momentum's confirming it as well. Because I know we typically look for different levels of confirmation. I know we talked one about price. I know some traders look at different indicators or other derivatives of price, so we can see momentum still getting overbought with that move as well. And if we look at the possible target, if this is indeed a continuation of that breakout of that flag, we would take that entire flag pull and add it to the breakout point to get that target price.
Like the sound of that potentially, Rachel. Tell me real briefly your thought. Do you like and this is always objective, right? Because it is a subjective decision, but some traders like to start drawing that flagpole from the absolute low seen before the move. Others would base it on the gap low, but it really is a subjective decision between traders, one trader to another. One way to think about it might be to go with the shorter ledge or the shorter distance, just so that you can get yourself maybe a lower measured move target that would encourage you to take a little bit of profit, maybe a little bit earlier than others. And the only reason to do that, of course, is just to not put yourself in a position to turn a good trade into a bad trade, right? Some traders like to be targeting upper levels and moving on from the position when the stock spikes in their favor. So how would you draw the line from here, Rachel, just out of curiosity?
So again, this is subjective, but me personally, I would draw it from that level that we see there. And the reason why is because the market showed the significance of that level. There was a couple knocks on the door before we finally gapped through. And we had that breakaway gap, which a breakaway gap is gapping above that prior resistance. And it's almost like that start of that new trend. So for me, subjectively, it would be right at that level that you drew there, and then added to that breakout point. We'll see where that places us.
All right, so I'm going to take my line, adding it to basically the high from Friday, essentially, or even the line that you've drawn in somewhere in this vicinity, right? And that'd give you an approximation right in the neighborhood about 400 to 405. But again, when we start doing these calculations, we know they're never guaranteed to be achieved, but traders can start to work with those and position their exit strategies based on the possibility that it gets to some of those levels. Rachel, would you maybe expect to see some traders just targeting 400 even, just because it is a round figure and we humans tend to lean towards those?
I was just going to say the same thing. Great minds think alike. Yes. So traders love round numbers. So because we have that 400 level looming there in the distance, we may see a touch or an overshoot of that level, which is typically what we kind of tend to see with those round numbers. And then also for our longer term investors, if we tend to zoom out a little bit as well, looking at those prior cycle highs yet again, that 400 level, 400 zone comes into play there with the all-time highs too.
Yep. 414.5 is the all-time high. I look, I'm sure many a trader out there is going to say, well, if I can get it to 4, why can't I get it to 414.50, right? And you may very well be right. There's every opportunity, but don't, as we often say, don't allow a good trade to change and become a negative trade, right? Be hard to do depending on when you got into Tesla necessarily in the last few weeks, but nonetheless, set your targets, utilize good till canceled limits if you're a believer on selling into strength rather than selling on weakness. Not everybody is comfortable or likes to sell into strength, but that's a way that a lot of traders will do that, is they'll look for those spikes that allow them to exit real small portions, maybe 5 or 10% of the trade as it's moving to new highs, because we often say it, new highs are not bearish, right? Generally speaking. So we try to stick with those winning trades as long as we can. But Rachel, the key component that I think a lot of traders have learned about, if you're a seller into strength on a portion of your trade, the most important subsequent decision is to utilize a stop on the remaining shares that you have.
Correct. And I know a lot of clients and traders that I talk to as well will layer out their positions too, because I know a lot of clients want to be able to take some profit, but also stop out any losses that they have. So I've talked to clients through unwinding strategies of positions by taking 25% of the position off of the table, or taking 50% of the position off the table. And you could layer out your profits and layer out your stops that way as well. And I know we have many different stop orders that you could utilize. You have your stop market, your stop limit, and your trailing stop orders that you could utilize in the platform. And I know we have a ton of education that we provide on just how to utilize all of those with your strategy too.
Absolutely. That's what we do here. We educate tons and tons of archived content for you all. Hopefully that's being utilized. We talked a lot about the chart and the possibilities that could play out. Let me just leave you with the commentary. I gave you the the raising of the target to 235 from 270, maintaining an equal weight rating. But Dan Libby made the following commentary about the shift here. Said things to pay attention to. The post-election rally in the shares is largely on a stronger narrative and then technical factors, while key fundamentals for Tesla remain relatively unchanged. The firm says that the company's so-called Elon premium is a key portion of the rally we're seeing, and it's exacerbating its so-called key man risk, that being tied to Elon specifically. Now, the administration policy changes, according to the note for Mr. Levy, are likely to be neutral to negative for Tesla's auto and energy businesses, but it's beneficial potentially to its autonomous vehicle efforts. So all of that you have to bear in mind here, everybody. Could we be seeing simply a narrative-based pop as much as anything else? Entirely within reason. So bears watching, a little bit of optimism, obviously, and certainly a little bit of momentum. Keep your eyes there as it relates to the story. One other area I wanted to get to today, Rachel, was on Netflix. I don't know if you paid attention to this on Friday, but they had the Jake Paul, Mike Tyson fight. Evidently, it was watched by quite a big number, 60 million households watched the boxing match. And if you were one of them trying to watch it, you understand why we had such difficulty after seeing 60 million households attempting to watch it. It was a very difficult streaming experience for many viewers. But it was a record-breaking spectacle for the ages, according to Netflix. For the first time ever, Netflix and Most Valuable Promotions teamed up for a boxing mega event that was headlined by Jake Paul and Mike Tyson, streamed live on Friday from AT&T Stadium in Arlington, Texas. They had 72,000 in total attendance and 60 million households. That is just a huge, huge number, peaking at more than 65 million concurrently, Rachel. Excellent development.
Wow. And their price is surely showing that as well. So we're just a little bit from all-time highs, making new higher highs, higher lows. And it looks like the trend here is pretty strong, and even with momentum as well. So it's definitely something that shows up in the price.
Yeah, it is. But it's also broken this lovely little ascending triangle, right? So you had a nice little break that took it all the way up to the high at 840, 841. And now you're bull flagging a little bit. Too early in the day to know if this is a very quick bull flag or maybe something that needs a little more time to develop. But, you know, if you're watching it on that short-term 5-minute bar chart, everybody, the action immediately here in the last 15 minutes, getting it through its intraday pivot and the highs of Friday, or close to the highs of Friday, at least give you some enthusiasm potentially here. I do find the level that we stopped at to be kind of notable. So let's see if that manages to hold resistance for the day. We'd obviously like to see it get right back through there and continue that bull flag potential breakout. But nonetheless, a pretty intriguing look at a chart that's done exceptionally well on a year-to-date basis. Boy, if I just quickly, because I like to cheat here, we're given the chance. Let me just go to the price axis and see. Yeah, not bad. Right now, about 74% for the year. Up pretty good year. Not bad for Netflix, Rachel. So with that, Rachel, we are at time. Inevitably, it goes way too quickly. But really appreciate you being here. Now, I'm going to be out in Miami next weekend here. Are you going to be in Miami as well for our upcoming market drive?
No, unfortunately, I won't, but I'm jealous of all the sun and the warmth that you're going to get there. You'll have a blast. But I was just in DC the other week for our 2-day trading workshop, and I'm going to be in the Atlanta one in a couple months too.
Wonderful.
So maybe I'll see you there.
Hopefully. I hope you see, some of us will be there, of course. We'd love to see many of you all. If you have an opportunity, go ahead and check out the events calendar, schwab.com/events for us. We do have the 2025 calendar out there for the first portion of the year. Some of those registrations have opened up already as well. So check that out. So big thanks to Rachel for participating, joining me today. And I want to thank all of you in chat. Big thanks to Cameron, of course, because the chat was quite lively here today. I hope you all have a fantastic Monday. Follow Cameron and me on X. Hit that thumbs up button at the bottom for us today. We'd greatly appreciate that. Hope you have a great Monday, everybody. We look forward to seeing you again real soon.